Well, welcome back this morning. So as President Trump wages trade wars with some of our closest allies and he declines to roll out a recession, the stock market has plunged in response. And to talk about what that actually means for your wallet and you and how you might be able to prepare, I'm joined now by financial expert Terry Savage. Good morning, Terry. Good to see you.
Good morning, Audrina.
All right, I know everyone watching would love to have a conversation with you one-on-one and ask you what they should do right now, where they should put their money. A lot of people scared. What's your best advice for anyone who's watching right now that sees this big slide in the stock market and doesn't know what to do?
Well, let's start with the economy first and the fact that we're probably very long overdue for a recession. If you don't count the pandemic dip that was, the 2 months in the spring of 2020 when we literally shut down the economy. That doesn't count as a long-term recession. The last time we had one was 2007, 2009. When you think about it, anybody under 40 was probably just graduating from college, doesn't even remember what it's like to lose a job, have someone in your family lose a job. Plus, we have a lot of government employees who are being shocked right now because they never thought they'd lose jobs. So it's a crisis of confidence is part of what creates a recession. We've already seen consumer confidence sharply dropping, retailers announcing that they think consumers aren't going to be spending, and that kind of pullback, which is a natural thing, is what creates unemployment, recessions that really last a long time. So the first thing is, if you are in debt right now, my goodness, if you still have a job, go concentrate on paying down your consumer debt. Build up your savings. It could happen to you, and that's what recessions do. So the stock market is reacting, of course, to the concern about the economy, the fact that we're having huge changes, and more importantly, a lot of uncertainty. The tariffs are on, the tariffs are off, the retaliation. What will that do to prices of everything from energy to food, imports from Mexico if we don't, if we have that tariff? Where are you going to get your groceries and your vegetables? Canada already shutting off electric, or raising 25% tariffs on electric power to, I think it's Minnesota, Michigan, New York, where they supply the power. All that is creating havoc in the stock market. Now, this is where you have to figure out who you are. If you're working, you're contributing your 401k plan, keep contributing. We'll have a bear market. We've had bear markets before, and always the market goes higher. But if you're retired and now you're living on this pool of money and maybe even required to take money out once you're 73, I've been saying this for weeks. There are a couple of columns up at terrysavage.com. This is a time you raise some cash. We're still only down less than 10% from the highs. I mean, the bear market of 2007, 2009, that financial crisis, the market was down 53%. So this, if it's going to be a bear market, everybody's going to say to you, don't panic. Well, if you're retired and it's a fixed pool of money, this is the time calmly to raise some cash. If you're younger, that $300 a month you put in your IRA, well, that'll just buy more shares at lower prices. But it can be very upsetting to live through a bear market, and I think we're a bit overdue.
Terry, that 3 minutes just flew by, and we did not get to all the other things I wanted people to know about. But I know that if they're watching, they can go to terrysavage.com to connect with you. Thanks for your time this morning.
Thanks, Audrina.